Hi, this is PR Sundar. Welcome to a post-market report sponsored by Delta.exchange. What will happen to our markets if FII stops selling just for one day? And that is exactly what has happened today. Nifty shot up nearly 400 points. The Bank Nifty shot up nearly 1000 points. But it was not a smooth ride. There were all kinds of dramas. Yesterday, what happened? Because of the global cues, markets fell. And because of that, people have sold 23,500 call options aggressively. And today, opening itself was about 23,500. And that's what I mentioned in my pre-market report. And today, these people have to run for cover. So, because of that, the markets can move even higher. So, that's what exactly happened. Morning, big gap up. These people were scared. They were running for cover, squaring up their position and moving the markets even higher. Then came something very extraordinary today. Markets, today I've taken a bullish view. In the morning itself, I sold some put option in Sensex option. I sold around 50 rupees. And after some time, the Sensex has moved 200 points higher. When Sensex moved 200 points higher, what should happen to my sold put option? I sold at 50 rupees. That should go to 30 or 25. But on the contrary, it has shot up to 100 rupees. Now, can you imagine when the market going higher, put prices are not going higher, it's doubling. And same thing, I sold some call options in Nifty also. Then suddenly I took some bullish view, I sold put options. And then market continued to move higher. So, I just want to move the puts higher. There is no way I can move the puts higher because whatever puts I sold, they were all in losses. Market keep on going higher, put premiums keep on increasing, call premium also keep on increasing. That's why the India VIX was higher today. And then suddenly this China news came. China announcing some retaliatory measures against US tariff. And that news came, suddenly the US futures went down, and here Nifty also came down by about 100 points, more than 100 points. Then again put premiums are shooting up, but call premiums are also shooting up. Today I can tell you it was a very, very crazy market. Right? 1,500 point, 2%, 3% away. Put premiums are shooting up like anything when the markets are going higher. So, after market bottoming out, market reversed, market continued to move higher. And Nifty, moving 400 point, this is one of the largest green candle maybe in the last 1 or 2 months. Now, today, the heavily beaten down stocks have moved significantly higher. Look at Reliance Industries. Look at Axis Bank. Axis Bank went up to 1,340, then it came down to 1,020. I thought, 30% fall already. So I thought maybe I can buy. Then I bought. The results came. The people are not happy with the results. So it continued to fall. So it fell another 10% from the level where I bought. I think the low was around 940, something like that. And today, there was a significant up move in those kind of stocks, even the Reliance Industries. Before results, it was trading around 1268, 1270. Then after the results, it went another 50, 60 rupees higher. Then came down and broke that level. It was trading below that level, pre-result level, until yesterday. Today, there was a significant move. Now, the question is, what next? Yesterday, I painted a bearish picture. Today morning also, I painted a bearish picture. But now, I'm turning bullish. I follow certain technical analysis. As per that technical analysis, now the Nifty is long. Right? And today, I'll tell you another joke. I sold call options and markets moving higher and my MTM losses increasing. I want to sell put option. I sold put options. But put premiums are not coming down. Then I don't have any extra money. If I want to move puts, also no use because it's sitting with a loss. Then suddenly I saw some in the money options like 23,000 call, 23,200 call. Those calls were trading 45-50 rupees discount to the intrinsic value. Say for example, Nifty is trading around 23,650. That means 23,000 should trade at least 650 rupees. Intrinsic value itself is 650 rupees, but it was trading around 600 rupees. So then what I did, I bought some options, because for buying options, you don't need much money. You just need only the premium. But had the market reversed, I would have been in great trouble. But the people, even who bought the call options yesterday, those who are holding, they were also not convinced about this rally. They were prepared to sell their positions at a 50 rupees discount, right? So, but luckily I bought those options. That's why I could manage my positions and I came out without loss. In fact, made some money, some profit. So it was a terrible trading day, I would say. Now, if I'm not wrong, maybe 1 or 2 more days we may have to wait. But now, technically, markets are turning around. If you can remember last Saturday, my video, we cannot be too much deviating from the global markets. The global markets are all hitting all-time high. We are, somewhere, 1 year low or something like that. Either global markets will have to come down or our market has to go up. So there were enough ingredients for our market for a significant short covering rally. 2013 comparison I have given. 2013 also rupee at all-time low. Now also rupee at all-time low. That time also FIIs were selling. This time also FIIs were selling. And that time, Nifty fell about 20%. So this time it has fallen about 12-13%. No, but this time is different because a lot of retail people are coming into the market. So that time one day LIC entered the market, markets turned around, and after that Nifty has never fallen below that level. And the way markets were moving today, I thought today LIC has actually entered the market. But at the end of the day, that's not true. Domestic institutions were actually net sellers. It is the FIIs who are net buyers, but for a small quantity. But FIIs stop selling, itself market can shoot up. So I will not be surprised even if Nifty goes to 25,000, if FIIs stop selling or if they continue to buy. So anyway, we will wait for some more parameters to be confirmed. And, but when I say this, don't go and take some long positions. Markets will always give some opportunity, but you understand the underlying trend. Now the underlying trend has changed from short side to long side. Then wait for some dips, and then go and sell put option, maybe 2-3% away. Just maintain some stop loss. Most probably you will make profit. So that is how I trade, So because if I say market is long, then you go and buy a call option, I always say buying an option is like, always operation success, patient died. I was bullish. 2 days before, you all know, I've taken a very bullish view and I also bought call options. But what happened? Yesterday, the market came down, scared me. I closed all my positions and now the market are shooting up. And today the market is higher than the budget day high. Right? So markets will always give some opportunities. So anyway, the more we will discuss tomorrow morning. Hope you enjoyed watching this video. Thank you for watching.